All right, good morning, everybody. Today is Tuesday, September 25th, 2018. This is your daily Forex trading strategy session. Hang on, let me bring up, forgot to bring up the chat. Hang on. Where's, So you go to youtube.com/c/Forex.Today/live. And you should be there. A little slow today. So anyways, hey, let me remind you that trading is risky, not appropriate for everyone. Let's see. It's loading. Wow. Stuff's slow today, huh? There we go. Cool. Oh, where'd it go? Now where'd it go? Gee whiz. All right, I guess now we're ready to go. Okay, now we're ready to go. Cool. So anyways, good to see you this morning. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So for the third or fourth time, good morning. So I'll adjust the camera a little bit. Yeah, good morning. Nice to see you. Maybe a quiet trading day today. That'd be a good thing. And I'm going to start pulling down this old rig and rebuilding it, I believe, later today, maybe tomorrow. So I'm kind of looking forward to that. My name is Wayne. I'm a currency trader. I'm here to be your guide. I'm here to answer questions. I want you to be a success as a currency trader. So please ask questions, get involved. Please subscribe. The reason you should subscribe is when I click start and the webinar begins, subscribers are notified. And if you want to attend, you click a button and all of a sudden, boom, you're right in the live session. So please do that. Also, please leave a like. It's important that you leave a like as well. If you're watching a recording of today's video, would you please leave a comment? I actually look at the comments, and if you want me to cover specific things that I haven't covered recently in the webinars, please leave a comment so that I can go back and check. So that so if you want me to cover Kiwi Swiss franc more often, yeah, maybe I will. I will for you, but you got to let Uncle Wayne know, okay? Anyways, I really hope these webinars help you, that they're at the very least entertaining, but maybe they actually help you develop your skills as an independent foreign exchange trader. If I have earned your loyalty and respect, will you please show it by visiting tradersway.com and opening up a demo account, at least a demo account. Traders Way is a boutique foreign exchange brokerage firm. They're an ECN, so they're not trading against you. You can also choose from a variable spread or fixed spread account, so give it a shot. I think you'll be pleasantly surprised. World-class customer service, all that kind of stuff. Visit Traders Way today, eh? So just go through the yen pairs. Go through the dollar pairs. Go through gold. Go through oil. Does that sound fine? Sounds great to me. Get her done. Let's dive in. You know what? Let me bring up the other chat. It's just easier for me to see. And it's over here. Oops. All right. Sweet. Is there a bit of an echo? Yeah, I got to figure out how to do that because I don't know. I have to figure out how to do that. I figured it would echo, so I apologize if it did echo. All right, so let's go through the pairs. This is just the normal setup for yens. We'll do yens in a little bit. I want to start here. I've been bull on oil for a couple of years now, sticking with the general bias. We've been in a series of higher highs and higher lows, which, you know, I guess if you have a bullish bias, makes sense. Currently, we are still working our way up to the target. Remember, our target is 73, and we're now at 72.27. Which is a pretty good stretch, right? We're almost there. The last buying, you know, started around 66, and then another one at 69, and then another one at 70, and now we're at 72.25. Not too bad. Now, to really get the story, we need to go to Brent. So let's look at the energy complex. Oh my God. Everything is way up. Everything is way up. Nat gas is skyrocketing on its way to the monthly target. So nat gas, you should start feeling conservative. You should start thinking about taking profit. WTI, as you know, we're about 75 cents away from hitting the target as well. Looks like we did hit 72.50, so we're within 50 cents of the target. Like, that's pretty close, right? And then Brent, you notice Brent at 81? Now, I thought it'd be interesting to see what happens when Brent hit 80, because we saw, you know, almost 80, then down, and 80, and then down. So what do you think it means that we finally busted through 80? Well, if you want to trade, if you want to continue to be a bull, okay, right? And remember, we're talking now like what, $90, $100 barrel oil, maybe? Oh, it's all within the plausibility once you start breaking out. Okay, I'm trying to back out here. It's been a while since we've been above this line. You see, this to the left is May. Let's go here. Okay, going left, this goes all the way back to 2016. This is going back to 2015, right? So you kind of get my point. This is a big deal, isn't it? Don't you think? Okay, so what does that mean for WTI? Well, WTI is on the free and clear plan to go a little bit higher, right? Oh, Ron's in the ATL, huh? Very cool. Namaste, my good friend. Amazing seesaws. Well, no, yeah, maybe. But a little higher means that there could still be room for some Canadian dollar strength, right? That's one thing that I think it's fair to consider. So we'll go back to the standard setup. Oh, 5 minutes up, 10 minutes down. Oh, well, okay, sure. Oh, for sure. So, right? So we talked about this yesterday. It hasn't come together yet, but if you wanted to continue to be a bull on USD CAD, this gray area is your sell zone. So you can start putting together that trade plan, right, tactically? Right? So that could be a sell there. Also, going back to like 2 weeks ago, maybe 3 weeks ago, or I guess 2 weeks ago. Remember how we drew this triangle down here as a reminder that it's a double bottom? So how do we put this together? All right, if you believe WTI is going to continue to go up and at least hit the monthly target, that means there's 75 cents left, but it could go beyond the monthly conservative target, don't you think? Ron, I should fly down to Houston and visit you. We should go out for a big old steak dinner or something. Although I heard the curry chicken's good in Houston now too. And you can get some good Cambodian food in Houston, is what I've heard. So anyways, yeah, remember this triangle is like, hey, this is a double bottom. So if you're a bear and you believe Canadian dollar will get strong, potentially because oil will continue to move upward, then the way that you play this out is to short this lower high. And we already had this. I did this plan Friday of last week and Monday of this week. Okay, so if you're a bull in CAD and you're a bull in oil, yeah, you're on the free and clear plan to consider selling this, and you're at the exact price. You're on the smaller time frame looking for proper entries, all that kind of stuff. Now, if you're a bull, you can consider this would be plan A. So now you'd like to buy a dip, and maybe even plan B. Plan B for a bear, I don't really have one that I like. I mean, it's almost the same thing, right? Like if I had to put one on the chart, I'd say, well, that's plan B, but to me, that's the same plan as A. So what's plan B? There really isn't one. It's got to fall here or I'm not really interested. Okay. You're a plan B bull, huh? Yeah, okay, so we can go farther out. Sure, it looks all right, except you're buying something that's lower than the current support. Okay, so if I was a bull, I would not want that. But maybe you got a higher time frame reason for it, right? You're down here. Yeah, I guess it all works out to be about the same, right, on the long run. Okay. I also have next month in consideration, though, Brooke. Okay. So I kind of want this line to hold, as I talked to. As I explained to the other day, I think to us, but certainly to the swing group, I'd like, if I was a bull, I would like to defend that entry. So this would be actually wanted. I'd actually want something like that versus a straight rally, because if it gets too high too fast, it's got to come down. I'd like to confirm the right shoulder of the double bottom. Right? This is a double bottom of a double bottom. So that, I'd like to really confirm everybody's on board. Maybe that's how you clear the stops. You get people out. Okay? And therefore, this triangle. The reason that I drew that triangle for a reason, right? It's not like I do that all day, every day. Like, that's pretty rare. That's probably the first time in a year I've done that. But I'm trying to show that we need to have trade plans in advance, right? Because I believe we talked about the double bottom way over on the left before it even did the rally, and then it did then that dropped. Okay, and now so now we got to turn this ship around. But nonetheless, bears want to sell here, and bulls are like, okay, but I'm going to buy it there. And the real challenge is lower. All right, so bears need to do their job. Now, if they don't do their job, like I said, I don't even have a plan B. So that means whoever bought where they were supposed to, last week are really going to get paid. They're going to get icing on the cake. What do you think of this? What's going on? Okay, this is that big drop we had last week. Okay. There's the sell high plan. Okay. Now, this gray area I drew on Friday at probably 10 o'clock in the morning, so a couple hours after this webinar. The reason I drew it is it's the buy zone for this week's swing trade if you're a bull. Pretty hard to buy it when it's fallen that far, right? Very difficult to buy it when it's fallen that far. But nonetheless, I don't make up the prices. Okay? If you're a bear and you want to sell the lower high from this drop, that is also quite a valid setup, and you're approaching that now. Okay. So if you're a bull, you didn't buy it here. This was buyable, but not that easy to do. So if you didn't do it, I get it. It's doable, but it's not that easy to do either. This was better because this was the exact price. There was a reason for it last Friday and even Monday, right? And what else could you do? I mean, you could do this whole thing, look left, buy the retracement, right? Now it needs to make a higher high, higher low. So you might end up buying it here later, maybe. But still not that easy to do because bears are going to want to sell this. Every pip up, bears are going to be interested in selling it. So manage to stop wisely on this because there's a valid reason for this dropping. Not just technically, but fundamentally, right? Remember how I was making a big stink about this at the time? That it's collapsing because it's supposed to be collapsing? Oh yeah, Theresa May, wah, 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 wah. Yeah, but also the market was supposed to get out. So bulls, this is the price, and bulls can try to get back in, but it's still even dangerous for bulls. And the more you wait, the actual more dangerous it gets. Because where would a bear sell? Can you read their mind? They're going to sell here and they're going to sell there. See, I'm psychic. I can read their minds. Right? You're a Toro? Says, Wayne, good morning. Good morning to you, sir. Do I use the open interest reports as part of my analysis? No, I do not. I hope you're okay with that. So I'm watching this take off here. If you're fairly new to these webinars, you're probably asking yourself, like, well, how do I know which way it's going to go? Okay? That's the entire wrong question to ask. And this, you know, it was funny. The first time I actually heard that, I mean, it sounds logical, but I guess to me in my story, in Market Wizards, going back to, when was that written? 1998 or something? He interviews what's his name? Jones, Terrence Trent Jones, Tommy Jones. What's the guy that the commodity trader? Okay, what the heck is that guy's name? The guy that's got 3 names. Terrence Trent Jones. Too bad there's such a lag in the YouTube. It's going to take me a while to get it. Tiny Tim Tulip Tudor. Yeah, Tom Tudor Jones? Timmy Tudor Jones? Tudor Jones, whatever. We'll call him Tudor Jones. Anyways, Paul Tudor Jones. Anyways, so he was interviewed, and you know, he at the time he was the kind of guy that he would move the oil market, right? But he could do it for like a couple of hours. Soon as he realized the market was vulnerable, you know, and we can do this too. We know we can find these areas. Like, let's say here, you would know that the bulls are going to need to take profit and the bears are thinking about selling. So what if you just drop like a ginormous fat finger trade on this, just, and you really put some heavy money on this? And remember, the futures market is leveraged. So let's say you wanted the cash market to fall. So you're like, well, you could sell, you know, $1 billion in the cash market, or you could sell 40 billion in the futures market, right? So anyways, in that interview, somebody said, you know, blah, blah, blah. I forget the question, but he said, look, people come up to me after I've done it, and they're asking me what I'm doing. And he says, well, it's the worst question ever. It's like, I've already done this. I'm already doing, like, the plan is sort of over. You need to, he said something to the effect that people should be asking me, like, what am I going to do next, right? So, like, doing things like planning these tops and bottoms, trying to understand where bulls or bears are, leaving these little triangles as reminders. I'm always thinking about next, right? The charts don't tell you what's going to happen next. The charts don't really tell you direction. They do in the sense of timing your trades. They don't in the sense of what direction your trade should be going. That is the long-term fundamental analysis or long-term technical analysis. And it's up to you to, even if it's like flip a coin, bing, all right, for this year I'm a bull. Once you've made that decision that you're a bull this year or you're a bear this year, then it's much more easier to plan these trades because you know what your bias is. You know you're looking for resistance, or you know you're looking for support. So on a lot of these trades, you know, we knew where we wanted to buy. Like, for example, that is where a bull would want to buy. This is where a bear would have wanted to sell, right? Like, literally, the last day of the month. That is exactly where a bear would sell if you're front running. And if you're a bull, this is exactly where a bull would buy. There's no sort of argument about it. There's no real thought process behind it. There isn't some fuzzy logic, artificial intelligence, neural network involved. That's just where bears will sell and bulls will buy. Now, it fell where bears would sell because bears would sell there. And it went up where bulls would buy because bulls bought there, because that's where bulls would buy. Do we know which one's going to work? No. I never have an idea. Well, I have an idea. I never know where our trade plans are going to go. So over and over and over again for 15 years, how many trade plans have I set up over 15 years, right? A million, maybe? We end up trying to buy where support is, and we end up trying to sell where resistance is, or even to say differently, we want to buy where other bulls would buy or sell where other bears would sell because we're retail traders. We're small, right? We can't move the market like Paul Tudor Jones can, but the funny thing is, and he says it in the interview, Paul Tudor Jones can only move it for a few hours and then it catches up, right? But our job is to really think about where bulls would buy, where bears would sell. These charts are only kind of telling us that. They're not telling you whether you should become a bull or a bear. I think that's a real misnomer when it comes to technical analysis. I believe you should actually look at things like fundamental analysis, like supply and demand for energy, right? Supply and demand for currencies, central banking policies, because they're analyzing macroeconomics. Well, why would they, or even just look? They're managing the economics of their economy, right? And to have either a cooling off effect or a heating up effect, they manage their economy through the money supply. So now we're talking about supply and demand of a commodity, right? A commodity being a currency, and then you can't eat your money, so then you exchange it for something else. So if China needs to buy coal from Australia, right, there's going to be demand for the Australian dollar, right? But also the Reserve Bank of Australia controls how many Australian dollars there are available, right? So it seems to me to understand a lot of what we do as currency traders is you need to understand, is China going to buy Australian coal? That's demand side. And what is the Reserve Bank of Australia going to do in regards to how many Aussie dollars are available for the Chinese? If they're going to print a lot, then each individual one's going to be cheap. But if they contract the money supply, there'll be hardly any Aussie dollars, and the Chinese are going to have to pay a lot to get that Aussie dollar so then they can buy the Australian coal or iron ore. Okay. Mike says the question is, what are the levels rather than the direction? Yeah, well, I say it differently, but yeah, I agree with you, right? The way I try to train you guys is I say, okay, plan A and plan B. I'm a bull, so there's the first level of support. There's the second level of support. Or if I'm a bear, I want to sell here or I want to sell there. And if that doesn't work, well, I'll even sell up here. Okay? But I'm not looking at my chart going, oh, I guess because of this bullish engulfing candle, and I guess because of this RSI, and oops, that didn't work, right? And I guess because of the CCI crossover of the blah, 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 blah. Now, that's easier to sell you. If someone's got a book to sell, if someone's got a course to sell, if someone has a live trading room to sell, if someone has a strategy to sell, if someone has an EA to sell, it's a heck of a lot easier to say, oh, well, look, if you just wait for the CCI crossover, 82% of the time you're going to make a lot of money. That's very easy to sell versus, well, you really should study macroeconomics and money supply. But, which one at the end of the day do you think actually moves these markets, right? Central banking policy as they manage their economy through the supply of their currency, and and the products and services they offer the rest of the globe, right? Is that what matters? Like, for example, Australia sells a lot of iron ore and a lot of coal and a lot of wheat and a lot of beef, right? And a lot of financial services and a lot of other stuff globally, right? Wine, Australian wine goes globally, right? Right? So therefore, they're trading that for foreign exchange, right? Foreigners are sending their money to Australia so that they can buy the Australian dollars. So if they can sell a lot, then the Australian dollar goes up in value, but then Australia has all this foreign cash. Turkey, unfortunately, doesn't export as much as they probably should be relative to how much they need foreign currency, because they have all these foreign loans they need to pay back these loans with foreign currency, but they don't have any foreign currency. They're not exporting enough relative to how much they're borrowing from foreign investors. So now Turkey has to sell their lira to buy foreign currency to pay their foreign debt. But every time they do it, they weaken the currency, which means next time they need to go into the foreign exchange market to buy foreign currency to pay off their old loans, they got to dump more lira to weaken it even worse. And it's a vicious cycle. So we could say Turkey really should work on exporting more products and services. Well, that's economics. That's macroeconomics. That would solve their foreign currency problem, and maybe it would help with things like jobs and stuff, right? So anyways, going back to this chart will not tell you to buy or sell. It will tell you if you're a bull, there's support here, and it's very viable, right? There's your plan A, and then you can come up with your plan B. Well, if it makes a higher high, then you're going to end up buying a dip, and so on and so forth. Right? And if you're a bear, you could sell there, you could sell there, you could sell there. And you'll say, Wayne, well, which one? Well, if it comes up into here, drop into a 5-minute chart. And what if you saw now a reversal pattern? Okay? What if you saw now a big red candle? Then you could sell the pullback, okay? And you're short off of this line. And what's the plan? You're going to head down to this green zone, and that would be your trade plan. Will it work? I really don't know. Right? I don't know if you sold here, if that would work. I don't know if you sold here, it would work. But I can tell you there are people contemplating if it went up there, that's a double top of this move at a weekly pivot point, at a monthly pivot point, not just any pivot points, the weekly target and the monthly target. So yes, there are bears living there, absolutely, in my opinion. Do I know actually for sure? No. But if I was a bear, I would look to sell there for sure. And it'll probably happen this Friday. We'll find ourselves up there and then we'll dump it. Okay? Bulls would buy there. I'm not really sure where else they would buy, maybe these little mini dips, but those are dangerous because if that's our low and that's our high, aren't bulls supposed to be buying higher lows? Well, if you're not higher than this, then is it a higher low or is it just a lower high for a bear? See what I mean? Okay. So anyways. Sorry if I spent too much time on that. It felt good. I went with it. All right. Euro USD. Now, I've wanted this to go up for more than a year now, I think, right? How long have I been saying that even though the Fed's raising interest rates, and interest rates in the United States are vastly higher than other economies, even New Zealand, for crying out loud, regardless of all of that, the dollar should weaken. That's been a long time to have a counterintuitive point of view, right? I mean, every textbook says this should be going down, not up. Every professor at the university tells you this should be going down, not up. Right? What's the interest rate in Europe? Negative something? What's the interest rate in the United States? 2 and going up, 2.25 coming up tomorrow. It's like, holy smokes, we should be at parity. You remember those conversation, guys? Euro dollar should be at parity. I don't know about that, but so anyways, it's going up. Great. So what were the plans we created in the past? So on Friday, okay, what I was discussing is, yes, you can sell here. Yes, it's a counter trend trade. This is all created from bulls taking profit. Okay? And continuing the theme that we have today, and a bull would buy here. Doesn't mean it's going to go up. Doesn't mean it's going to make a higher high. But that's where a bull would buy. That's plan A. Plan B would be buy it here. I don't even have that one drawn. So plan A would be here. Well, what about these bears? What if bears actually sold? Because we don't know if these red candles are bears. In fact, we're assuming they're only bulls taking profit. That's why you want to buy back down in here if you're still a bull, because this is just profit taking, and then bulls are going to try again this week. Great. But what if they are bears? Where would a bear sell? It's a very simple question to answer. They would sell right there. So if you were a bear, and that's what this is, you would sell there, which I have it all drawn up. So if you bought here, you'd be making money right now. Not a lot, but you'd be making money. Or if you sold up here, whether it was this candle or the next candle, you made money for a while, only 16 hours. You only were profitable for 16 hours, right? So somewhere maybe you could have made money on that, maybe not. But nonetheless, what we're trying to train ourselves to do is not to think about rightness or wrongness. What you need to be thinking about is, since you already know you're a bull or a bear, okay, what you need to be thinking about is not rightness and wrongness, just plan A and plan B. So if you're a bull, where are the levels of support in which you will consider buying? Well, to answer that, like on Friday of last week, or let's say it was early Monday morning, I would buy here or I would buy here. Okay? So that would be my plan A, which I have drawn, as you can see. My plan B would be buy this one. Okay? And the habit, I'm trying to get you to have that habit, right? Double bottom, higher high, higher low. Plan A, plan B. See? Plan A, plan B. Plan A worked out. It's good. Plan A typically makes more money. Right? See this? Right? Plan A. Plan B is a little lower. We quadruple bottomed on plan A, but it still worked. Plan A, plan B. Right? So plan A worked. Plan A worked. Maybe plan A will work. Right now, it's working. Is it unreasonable to think that this might make a higher high up into here? Well, that is where we're going, right? We're supposed to be up into here. I think this was a plan A, plan B scenario too, where plan A was buy off the 4-hour 21. Plan B was actually the central pivot, which was probably a little bit lower and didn't even get that. So this was buy out of position type stuff. But nonetheless, plan A, plan B, plan A, plan B, not, I guess there's a big green candle now, so I guess I should be buying, right? Oh, did you see the move on ADP? I guess that means I should buy now. No. No. I'm not looking at the left of the charts, guys. Why would you look at the left side of the chart? Oh, I guess you can't quite see the 21 thing. Yeah, but you have your own chart. You should know this chart by memory. How many hours a day do you spend looking at your charts? 5, 6? Come on, Jimbo. All right, so let's do yen pairs. Loo-de-loo-loo-loo-loo-loo. Okay, I drew a gray line here last week. When I do this, what does it represent to you? Like, why would I draw something like that? So the message I was giving on this pound yen at the time, it was crashing fast and furious. Okay? The message was, holy smokes, look at it fall. Okay? It's interesting, right? Anyone that was with me at that time, I barely talked about it. I saw it, I looked at it, and I'm like, wow, look at that. That's really amazing. Look at fall. Right? But like, it wasn't like, oh my God, I need to get in, I got to trade, I got to chase. This gray zone ended up simply being, well, if we were to buy it, where would we buy it? Okay. It's not even an eventful area, really. As Brooke says, I mean, yeah, I look left and there's something going on there. It's not really much, but it had already fallen through much of the obvious stuff. But it's really just a basic entry for a weekly swing trade is all it is. Okay, so you would have looked on Friday, on Friday, you would have been looking like plan A, plan B. Plan A being the higher one. But you can see you didn't get it on Friday. We were kind of staring at that on Friday like, whoa, we're blowing through the first entry. But plan B, okay, it was hovering just above it. So if you're a bull, you also have permission to buy. I think my advice was it's still pretty dangerous to buy after, this is like trying to catch a falling chainsaw. Still pretty dangerous, but there is no other price for you to do it. So if you're going to do it, keep your stop close. Like maybe don't put your stop way down here. Maybe put your stop just down here. Right? Risk 50, not 150. But you're still in this habit of plan A, plan B. Now, bears. Can you sell here? Well, look, we've already completed the monthly target. This is so unbelievably important. It's ridiculously important. It's ridiculously important. A lot of people don't even know it. They don't even use the right tools, so they wouldn't even know why it fell. But anyways, this not only fell, it's ridiculously important. Okay? So, a bear, where could they sell? Well, first thing you do is look left. Okay? That is tradable. Okay? So my first want as a bear is to sell this. Does it look like we have an entry yet? No. Well, when are we going to get an entry? How about the New York Open? Oh, like coming up real fast. So this is very fortuitous, you say. I'm like, yeah, it is very fortuitous. Hey, Jefe, do you know what fortuitous means? Oh, you should live in my brain sometimes. It's really funny in there. Yes, I'm dropping the three amigos on you. Boom! So anyways, if I was a bear and I was prepared, I'd be looking at this to sell. To get your plan right, you gotta look left. So anyways, yeah, I'd be looking for reasons to sell in here as plan A, and then plan B is significantly higher, right? Huh? What do you think? Can we also check out Aussie USD? Please enter 20 euros to cover Aussie USD for the next 5 minutes. Oh, another 20 euros. Oh my gosh. Let me ask you, have you opened at least a demo account at tradersway.com? A jabillionaire? Huh? I hope so. Sure, I'll do that for you. I'll just leave all these yen pairs that we're covering, and we'll do Aussie dollar for you. Look at Euro Swissy? Sure. All right, Aussie dollar, Aussie dollar, Aussie dollar, Aussie dollar. All right, so last week, oh man, I've done that 4 times today, I think. Very, very easy swing trade. You see this one? That's last week's swing trade. Easy peasy lemon squeezy. Right? Cool. So, what about this week? Are you a bull? I'm going to be a bull. So let's do it this way. If I was a bull, ooh, there's a lot. What is this? We'll have to take a look. Plan A. And plan B. Plan B. With your smile so worn and your teeth so green, baby, you smell like Vaseline. Just the way you look tonight. Yes, you're ugly. All right, that's where bears are going to play. And yeah, all right. Got some craziness going on in here. So we already played that out, but it'll still work for me. All right. Going to go to 73. Now, why would you say 73 to M3? That's pretty weak. Yeah, I guess if you're going to go to 73 and get out, that means you don't really have any conviction, Scott. If I were to buy it at the 72.50 area, basically, I'd be going to basically 74. Okay. But with that being said, bears are looking to sell at 73. Absolutely agree with that. But see, I'm a bull, so I would destroy any bears in front of me. I just wouldn't buy up there. I'm not afraid of bears. I'm going to destroy them. Right? So in that case, I would just, when I get to 73, I'm going to need to move my stop to break even for show. But but this was like buyable here. This was buyable here. This is buyable now. And we're going to go to there. So I got to get paid. So I wouldn't get out at 73. I would jam my stop. I'm not going for 50 pips, right? I'm going for 150 pips. Because I'm worth it in here. Got a request for Euro Swissy? Why not? So you have to ask yourself here, what direction does Switzerland want this to go? Up. Okay. And what direction does Europe want this to go? Down, actually. Because a weak euro would be inflationary. And isn't the ECB trying to create inflation? So, anyways, you got to keep that in mind. Let me clean this up. Let's get a nice clean template. Wow, look at that trade plan. Huh. Boy, we did pretty good on that one, huh? Damn, that's beautiful. I don't even remember that one. Cool. I love it. Okay. So what's the trade plan? The most valid trade plan for the month on Euro Swissy? Well, bulls would have bought here at the beginning of the month. Okay. I know that's factual. Now, it went a little lower than that, maybe even significantly lower than that, but that has nothing to do with bullishness. And bears would have front run this here, near the end of the month. Okay. And what's everything else? I don't know what everything else is. Just noise, right? Imagine all the fortunes won and lost in this sideways move where nothing happened. So anyways, bears wanted to sell there, bulls wanted to sell there. So where is this going to go? Well, does it look more bullish or more bearish? And these are the questions you need to ask, right? If, you know, ideally we'd be selling soon if you were a bear. Okay, so you want to, what, buy Swiss franc? Well, I guess you have to ask yourself, what is it that you're doing if you are selling Euro Swissy? Are you selling Euro or are you buying Swissy? You'll say, well, Wayne, what's the difference? Well, intention. So I might say, well, Switzerland's going to hate the fact that you're buying the Swiss franc. Okay? So do you really want to take on that risk? Right? So if you're selling Euro and you really are worried about buying Swiss franc, you much rather sell Swiss franc because you know Switzerland, the Swiss National Bank, would like you to weaken the Swissy. So they don't want you to buy it. So maybe you're like, well, I see this going down, but I don't really want to buy Swiss franc. So you could sell Euro and buy yen. That would be a direct correlation or almost, right? You could sell Euro dollar, but you might not want to buy dollar. You could buy Euro pound, sell Euro pound. You could sell Euro Kiwi. You could sell Euro Aussie. You could sell something, right? But you see the logic that you don't just treat this like a video game, like boo 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 boo. I see the line. Oh, look at my CCI. Boo 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 boo. MACD. Boo boo boo. You think about it and say, all right, how does this play out? Right? The ECB would love for the euro to fall. Cool. Swiss National Bank would hate for that euro to, or the Swissy to strengthen. Ooh. Maybe we play it out. See, Switzerland hates Swiss franc strength so much, they're willing to pay you money to borrow the Swiss franc. Because when you borrow the Swiss franc and take it home and get it out of Switzerland, it weakens the Swiss franc. The volume, the amount of Swiss francs on the global foreign exchange market increases. Therefore, its value decreases, right? So they're paying you to borrow it. They will pay you money. It's like a mortgage that you make a profit on, right? It's like for your $1 million house, you need a mortgage, so you borrow some money and the bank says, every month, sir, we will show up with $2,000 in cash and give it to you just to thank you for taking our $1 million. And you're like, oh, that's so nice of you, right? So, well, you're not going to get too many bankers that are willing to do that, right? Johnson's not his job to weaken the Swiss franc. Yeah, but you might, it's someone else's job, right? Like Jordan, right? Can come in and take your personal wealth because you're on the wrong side of that trade. Okay? And maybe you don't have the history that I have. I've seen some pretty nasty stuff, especially out of the Swiss. So be careful is all I'm saying. Okay? So if you were a bear on Euro Swissy, you could start thinking about selling it right now. And I mean now. I don't mean pull the trigger now. I mean you need to start creating some sort of plan. If you're going to sell this, you know, if it dropped 100%, that would be meaningful to you. So let me do this differently. Okay? A retracement more than 786 is not a retracement, but a reversal. So 100% from that low to that high, drag that, or do it this way so it's a little easier. Okay, move it now to the future. So if you found now that price went from where we are now down to this level, now we've gone from this top to the old support, right, to the old bottom, which that would then make this 382 to 618 your new sell zone. So your new trade plan on this 15-minute chart or even a 5-minute chart would then sell the next rally, and now you're set short on this chart. Okay? That's called a tactical entry into a fundamental trade plan, right? Well, not even fundamental, into a strategy. So my book, you know, strategic and tactical Forex trading. That means I have the strategy first. For whatever reason, I like this price of selling Euro Swiss franc on the 4-hour. Maybe it has to do with this weekly pivot. Maybe it has to do with next month's monthly pivot. So based on that, I want to get short, but nothing about this tells me to get short now. My strategy is to look to get short, maybe. Okay, so now I get into a smaller time frame and I wait. And that's the tactics now, right? There's some generals sitting in a war room moving this pawn here and that pawn there, like, oh, we'll move the Navy here and the Air Force will come in and behind them, we'll move the tanks, right? But then there's some kid kicking down doors, right? There's strategy and then there's tactics, right? Okay. So tactically, Johnny, now you got to wait. Wait for the sign. I saw the sign. It opened up my eyes. I saw the sign. Fully fed. Little tapering off. Amazing. Cool. I propose we go back to the yen pairs. What the? There's our little trade plan for the bears. La la la. La 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 la. La 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 la. La 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 la. Cool, right? Cool. And thank you guys again for attending the webinars every day. It's really good to see you guys. I like our hour of power together every morning. Okay. So a conservative tactical entry would look like that now, probably. Wondering, what is your number one trade setup? Can you define what trade setup means to you? What moving averages am I using? Well, 2155. 200, 5 and 8, but I have something like 4,000 videos on YouTube, and it's not even a joke. So there, I did a series of videos for FXCM maybe 10 years ago or 8 years ago on YouTube, and I think it's 4 videos. That would go over everything. Now, let's see if I can find one. So I go to YouTube and I type in, I think I called it Timing Your Trades. So let me find that for you. Wait. Timing Your Trades. Forex. I'll just type in Forex, make sure. Okay, here it is. Okay, I'll put the link in the description below if you want. So it's 4 videos, but one of the first things it does is go through all the moving averages, the oscillators, and all that kind of stuff. Oops, where did everything go? Hang on, I lost the chat room. Hang on. Oh, it's over there. So check that out, because it's, like I said, it's probably an hour worth of videos, but they're all linked together. So it's timing your trades like using moving averages, timing your trades using oscillators, timing your trades doing this, something else, all that kind of stuff. But it's all there. So, and are they simple? Yes, they're. Oh, no, the moving averages? No. Yes, Jim's got it there. Okay, so the link is there, but just type in timing your trades Forex. You could type in Wayne McDonald. You could type in FX Bootcamp. I mean, there's many, right? But like I said, I think there's between me, FX Bootcamp, Forex.Today, and Traders Way, I think there's something about 4,000 videos. So those resources are available to you for free. And yes, I've been doing webinars that long. All right, we don't need to do ZAR. Aussie, go back to Aussie. Just caught up here. This R level shouldn't be that meaningful. I don't remember what all that was about. Oops. Undo it? No, can't undo that. I'll just reset the template. Okay. I don't really care about R pivots that much. If I was a bull, I'd treat this as a higher high. That's about that. I mean, what you're trying to do is buy the dip. I guess the concern with this one is we're so far out of position that there's no real buying opportunity except for this 21 catching up to us, which is definitely viable. And there's a bit of a role reversal, but we're about 50 pips above where I would typically start to look to buy, but that is neither here nor there. At the end of the day, it's going to go up where it's going to want to go up. So that could be very bullish. Could be very, very bullish. Okay. Kiwi is doing the same, isn't it? It's not as low as I'd like to buy it, but it's buyable. Even on the 4-hour now, you're getting a 5/8 kiss, which is the precursor to a 5/8 cross, kicking off the 21. That's very bullish. Okay. And you already know we set this up 3 weeks ago to be bullish. So here's that double bottom we predicted. There's the second entry. This is actually the third entry, and it's so overbought that you have to buy it overbought, as I call it, out of position. So you're not using the pivots as an entry. You're using the moving average as the price entry. And the target, so we're at 75. The target is 77. So there's still 200 pips left in this trade. You're welcome. Oh, we had an inside month. Let's check that out. Well, yeah, what you're seeing is a reversal, right? Okay. But at least I put together a trade plan for you. Right? I spent, what, 2 days explaining the potential for a reversal on Kiwi Yen to the upside. I spent 2 days setting up the technicals. And now it's moved 300 pips up with another 200 pips to go. I know, I spent 2 days setting it up. Yeah, I know. And I love the fact that this left shoulder, if you want to call it a double bottom, began, really took off on the 3rd week of August. So anyways. But yeah, thanks for catching the R1, S1 inside month. Okay, that's cool. And you can kind of see that reflected in next month's pivots. It's, we don't have a higher high. That's faux show. But of course, the pivots were thinking low, right? But remember, all indicators are just simply algorithms. They're not smart. They're just they're doing the math and putting the colors where you told them to put the colors. So the pivots here, we're thinking the market's going to be bearish again because it was bearish earlier. And that's all it does. Open, high, low, close divided by 4, right? Or, right, high, low, close divided by 3. Either way, it's plotting here and it's plotting there. It's a weighted average. So if it started low, it says it's going to be low again. It doesn't say, oh, well, this has the potential for a double bottom, and based on seasonality and macroeconomics, this has a pretty good potential of going up, but more specifically at this exact price. It doesn't say that at all. It just says high, low, close divided by 3, plot the color down here because of the weighted, right? So this pivot point here was lower than the previous one. I'll show you that. I can add that now. No. Okay, so you can see the previous pivot was way up there, and now it's way down here. So the math is just going to say, oh, it's going to do another drop. Of course, that's not always true. It's often true because the trend is going to try to prevail, right? The trend is going to be your friend until it betrays you and stabs you in the back and takes your dog and your car and you never see her again, right? So, right? And so now the next pivots are going to move, and these may not be accurate because they were thinking down, but we're going up. Right? Delbert says, well, with the RBNZ tomorrow and their likely decision not to make any changes, blah, 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 blah. Yeah, well, the thing is, what if they shock? What direction are they going to shock? To the upside, most likely. Yeah, they're not going to need to raise interest rates. Especially if we're finding some support here. So I think nonetheless, over and above all of that is the analysis I share with you every year, year after year after year, right? Above and beyond even the central bank raising interest rates, it's business that matters most, business cycles. Because it's the business cycles that dictate whether the central bank should change their monetary policy of managing money supply. So the Kiwi dollar is going up here because it's supposed to. Sorry, the Kiwi yen is going up here because it's supposed to. Because I told you 12 months ago, and 9 months ago, and 6 months ago, and 3 months ago, it was going to start going up this week. Right? Like literally. 3 months before this orange vertical line, 6 months before that orange vertical line, 12 months before that orange vertical line. The trade plan was, it's going to start going up now. This one happened to double bottom first. Well, okay, Kiwi was pathetically weak. But now it's not weak. Maybe it'll continue moving up. Why? Because it's supposed to. Above and beyond whether the central bank raises or not raises interest rates tomorrow, it's still going to go up. Now, a central bank or an economic piece of news can come in along the way and move this sort of up and down, but it's going to move in the direction it's moving because people need Kiwi dollars to do business with New Zealand. Right? That's the most important thing beyond everything else. Now, there was a time when New Zealand paid 8.25% interest. A stable economy with a stable government, with a stable rule of law, paying you it was 8.75%. Which means with my leverage, I'm earning like 850% interest per year. That's how awesome New Zealand Kiwi yen was I guess now 10 years ago now. And there is a video on YouTube of me talking about it. I believe I was at the New York Traders Expo. I can even tell you what room I was in. So back then I was earning 8.5% on a Kiwi yen spread called a carry, but I was leveraged. So if I earned no pips at all and held that trade for 1 year, so I bought it for 1 year, I was positive, and on the 365th day, knocked myself out of break even. So I earned no money on pips. I would have had an 850% return on investment, purely because I collected interest. So at that point, you can imagine the Kiwi dollar was actually quite strong, because it went from simply doing business with New Zealand to like, holy crap, they're going to pay me all this money to hold, right? So anyway, so people started simply putting money in New Zealand to earn the interest, and that changes everything, right? So, soon, Mr. Ed. I'd say, well, so like today, Mr. Ed, I'm going to spend time, I think I have to tear down my rig and get that going. But very soon, Mr. Ed. Kenny, you're funny. Is there a leader in the yen pairs the same way euro leads against US dollar weakness? Is that true? Kenny, that euro leads against US dollar weakness? I don't even know what that means. So I'm going to have to say I don't know, Kenny. I didn't know euro led against dollar weakness. Really? I guess what you're saying here, let me try to translate that, because maybe you picked that up from somewhere else. The euro dollar happens to be 40% of our $5 trillion market. So I guess you could argue euro is going to lead dollar weakness, but it's just the fact that that the European market is 650 million people. Is that right? No, wait, 400 million people. Sorry, 400 million people. So it's a big trading partner. It's an important currency because it's a combination of what, 12 other currencies. So I guess you could argue that the euro leads in a scenario of dollar weakness. I think it's just more like there's just so many euros out there that it's 40% of the market. So I don't consider that a lead, but I could see how you could interpret that or argue that. It wouldn't be quite technically correct. There's causation and correlation. But so would that translate into a euro move? What? See, no. So like, for example, there was a time when euro yen represented the S&P 500, and they were correlated almost to the second, almost perfect correlation to almost to the second. But then there was a time when like Aussie and Kiwi moved really well because the but carries are gone now. So I'm just going to have to say no. I don't think there is a lead. I just think euro is going to be strong at certain points, and when the dollar is weak, if the euro happens to be strong in that moment, great. But there may be other things that are better. So I wouldn't always look to buy euro dollar. I might want to buy Aussie dollar today, Kiwi dollar tomorrow. I might want to sell USD CAD the following day. Okay, that kind of stuff. So sorry for being nitpicky on the language, but it's important because, maybe you didn't mean anything by it. Maybe you did mean something about it. So I just want to share my thoughts on it. So anyways, thank you, everyone. Please visit tradersway.com. Please subscribe so you can get invited to tomorrow's live stream automatically. Please leave a like. Less than 50% of people had the common courtesy just to give a little thumbs up. Just leave a little thumbs up before you go. And if you're watching a recording of this video, please leave a comment about what currency pairs or what analysis you would like for me to do tomorrow or in the future, or just say thank you. Just say, hey, thanks, or hi, or what up, or woot woot, something like that. But just leave a comment. It's important, okay? Right? It helps with YouTube ranking, and if more people watch the video, then perhaps it'll help them too. So without further ado, have a wonderful day. Keep working hard. It's totally worth it, I'm telling you. No, I'm staying to get away from the lira trades simply because I talked about them before the big move. Now I'm worried people are only going to move them because of the big move, and that's not conservative, disciplined, repeatable trading, so that's not something that I teach. I used it more of a discussion of economic discussion, but then Erdogan came out and ruined his own currency, but maybe that was the plan. I don't know. But without further ado, again, thank you to Traders Way. Thank you to Forex.Today for hosting us, and I will see you tomorrow. Thanks a lot for being on my team. Cheers.